Ben, great to see you, bud. Where in the world are you today?
You too, Chris. I'm in Dubai, man. I am over here for the World Blockchain Summit. There's a bunch of crypto conferences and stuff going on over here, and Binance just launched into the UAE, so that was really cool. They lit up the Burj Khalifa a couple of weeks ago, the tallest building in the world, and they had Binance all up and down the building. It's pretty phenomenal.
I saw that, actually. I'm not in person, of course, but it was beautiful.
Yeah.
It was really well done. Some beautiful kind of projections onto the building and very dynamic. That looked awesome.
I think it's very Dubai. I've realised it's my first time here, and everything's a bit above and beyond, right? It's always a show, and it's always someone showing off something. So I think it fitted in pretty well.
That's awesome. Tell me about the convention. What are you up to there, and what's it like?
So I've been to 2 conferences now. The first one was more of a finance conference I spoke at. So it was more like brokerage, forex, macro stocks, finance, things like that. And they had a bit of a crypto arm. So they basically paid me to come over and speak on crypto, which was pretty cool. And then I built in a few other things around the month. So the other conference, GITEX, it's a 4-day long event. I went the first day yesterday. It's absolutely bananas. It's a mix of crypto, fintech, digital, hardware, 5G, phone coverage, all sorts of stuff. There was like this futuristic like hover car and like a helicopter stuff. Like it was just nuts, man. And these booths, right? Like nothing like I've ever seen. Nothing like an Australian conference. Like we're talking 2-story buildings that have been built for a 4-day event. These booths with meeting rooms at the top and slides and like literal houses are being built for this 4-day event. So it's
Wow.
nuts, dude. Absolutely nuts.
That's awesome. Sounds a bit outrageous, but exciting. So tell me about what was the first kind of, you were doing some speech there. What did you cover?
So where I sort of sit in the world of crypto is really the onboarding side. So I love to help people that are in Web 2 or, looking to get into crypto or maybe dabbled in crypto, really understand the best ways to invest, what the common pitfalls are. Because I think there's so much misinformation out there, and usually the people that are delivering that information are influencers, and there are some good influencers, but I'm going to be honest, like I think most of them are providing some pretty average information, especially when it comes around to altcoins and FOMO and just market commentary seems to be pretty off. So I love being able to help explain the world of Bitcoin and Ethereum and how to set up a good portfolio, beginner, advanced portfolios, investing strategies in this space, and helping people really navigate through education, because I think one of the common pitfalls is that people aren't educated. They don't know what they're doing. They go and buy some random altcoin or barrel into something thinking they're going to make a bunch of money. The market dumps and then they sell and lose a heap of money. And I see that all the time. So I'm really trying to help educate and let people know that, hey, 70% corrections in crypto are normal. This is normal. This is not like the end of the world. This is just another day in crypto, and these are the assets to buy and hold, and this is how you should navigate the market.
Yeah, absolutely. And I think it's a steep learning curve in many cases, depending on how and when a user gets involved in crypto or Web3, and particular to crypto. I think if buying into the hype, for example, in November 2021, where it's up only environment and conditions, and someone who's never traded before decides that they want to either trade or invest, and like you say, 10 months later or so, down 70%, which to a veteran, I mean, they would have been strategically buying and selling and working the market, or to a more institutional firm or hedge fund, they would have been loving the volatility. However, your average user kind of in the center of the bell curve trying to onboard into crypto or Web3, it's rough. Yeah. It's rough. And to your point, the information out there that's either misleading or not intentionally, but just poor quality regurgitated information is ripe. And so if, I'm a new trader or I want to get into Web3, I am, consuming YouTube videos that are maybe half decent, or, with some guy pointing to the moon. So awesome. Now, it's great to hear that you're, there on the front line sharing, some good quality information and how to, guide someone into Web3 from Web2. Would love to hear more about your process, how you approach it, and, what kind of insights are core to what it is you're doing with that.
Yeah, so quickly just back to the other things I'm seeing here just quickly, Chris, is the Metaverse here, man, is the big thing over here. Like, it's all Metaverse. Metaverse this, Metaverse that. It's that's all they're really pushing over here. It's very little Bitcoin, Ethereum. It's, the conference I went to yesterday, there's so many different metaverses that are being built, and NFTs are massive as well here. Like, it's very little about the tokenized world and more about the NFTs and how that's going to be implemented in the metaverse and for businesses. And I think they launched their own. I can't remember exactly what it's called, but there's their own official like Dubai metaverse they've created. That's a world business center. They're trying to build a business center in the metaverse here in Dubai. So they're trying to replicate what Dubai sort of is as this international business hub in the metaverse as well, which is kind of fascinating. I'm not sure what your sort of opinion is on the metaverse. I know there's so many players going at it and so much capital being thrown out. I'd be keen to hear your thoughts. We can probably look back to that. But for me, back to your question around the investing strategies, look, man, I'm pretty simple, right? I'm a big Bitcoin and ETH fan. I've been buying since 2017, haven't sold. I took out for 2 years. I was taking my wage in Bitcoin. I just think I'm completely... even more recently with the macro factors, what's going on with the rising interest rates, cost of living, the government's printing more and more money, lack of trust in governments. I think we saw the British pound have its highest trading volume into Bitcoin the other day ever on record. Like, I think this is all just a great narrative for why Bitcoin is going to be such a great asset in the future. And I think there's just a lack of understanding of what Bitcoin really is. With the correlation of Bitcoin between our sort of risk on assets, I really don't see it as risk on at all. I think it's one of the most safest assets. And over a 4-year period, we're still up 300-400%, right? If we, I think, look over a longer period of time, people tend to have a short memory and look at a really recent period. If you bought back in November, I feel you're probably down 60, 70, 80%. But, it's only been, less than a year. Like, let's buy and hold and accumulate that over time. Like, if you've been in the market for 4, 5, 6 years, you're way in the green. So I keep it pretty simple. Bitcoin and then Ethereum. I don't own any other layer ones. I'm super bullish on Ethereum. Not to say that I don't think the others won't compete. Solana, for example, I think is doing awesome stuff as well, especially recently on the NFT platform. And but yeah, I think just the way Ethereum, the capital that's going there, the volume of developers, the things that are being built on. I'm super bullish on DeFi. I own a couple of DeFi projects, but yeah, honestly, Chris, I'm not an intra-term sort of trader. I'm a long-term buy and hold sort of investor, and keep it pretty simple on that level.
Love it. Yeah, love it. I think that's a good approach. And especially if, your ethos is really guiding, the middle of the bell curve, Web 2 to Web 3 transition, I think that approach is really important, and not try to time things or, because it is a risky asset class. And I think that's the bottom line, even if you are buying and holding. And, there's risk involved, and that's, I think, important to disclose. Regardless, just because markets have gone up since inception, and granted, even you look at your more traditional markets have just been in a longer cycle over the last 12 years or so, particularly, where money's been printed, and it's kind of been up only environment since 2008, minus a couple little blips, right? I was looking at the charts the other day. I can't remember exactly what the figures were. It was pretty interesting, actually. It was looking at Bitcoin not year to date, but from all-time highs, was down like 74%, and ETH was about that. But I wish I had these figures in front of me. See if I can find them real quick. It was Bitcoin was 71% down, ETH 72%. But if you bought Netflix, you'd be down 68%. Amazon 40%, Apple 23%. Meta 65%, Facebook. So if you're comparing it to your Nasdaq itself, 34% from all-time highs. So it's just been a part of that correlation with the risk-on assets. I think. I'm always a proponent of Bitcoin, and crypto in general doesn't exist in a vacuum. It is placed within a macroeconomic context, and there are all these forces and conditions around it that affect it and impact it. Just like the weather, it doesn't go untouched or unfazed. There's certainly the the underlying inherent value to it, it's specific to Bitcoin, let's say, and its code, its stock to flow and things like this, the network effects that give it value. But even, we've been seeing some really amazing news on the institutional level in the last few months. Huge news. BlackRock partnering with Coinbase and things like this. Fidelity coming in, offering rails into institutional crypto. Nike in their NFT sale. So there's a lot going on, and I don't mean to clump it all together. We're talking about crypto, one thing, blockchain technology, one thing, NFTs, another thing, and Metaverse, another thing. But generally, I do. It's kind of the broader digital asset space, right? And there's so much going on. But to come back to that question of the Metaverse, I'm not an expert on the Metaverse. I don't really have. I don't understand it so much, and I'm watching Meta and Facebook. They're putting $10 billion a year into their new Meta ventures, and they're prepared to do that for the next 10 to 15 years, 10 billion per year. So there's some big players getting involved. I was aware of Dubai's Metaverse plan, which I think you mentioned was intending to release 40,000 jobs. And boost GDP by $4 billion in the next few years, I think it was. I also clocked Shanghai releasing a $1.5 billion metaverse fund. So there, these big, I don't even know state organizations that are, bringing these 10, 11 figure budgets into the metaverse. So I, checking the wind. Okay, something's happening. I admittedly, admit that I'm a bit naive when it comes to the metaverse. I don't quite understand what it is yet. I look at different ways to define it. McKinsey and Company put an awesome article out on ways to define it. And a lot of the experts in the field that I'll read or listen to or reflect on. There's so many different ways to define what the metaverse actually is. Is it Ready Player One, where you're wearing your headset? Or is it just like an integration over 10, 12, 14 years where the supercomputer, the iPhone or smartphone became integrated into our daily life as something I'm not going to go get on my computer now. I'm not going to go get on my super phone right now. It's just integrated. I carry my iPhone in my pocket, and it's just an ordinary thing in my day that I utilize as an integrated tool into my life. So in that way, I think the metaverse, like I mentioned, the wind is blowing. There's something happening there. And it'll be interesting to see what happens, let's say, over the next 5-10 years with it as it integrates. What do you think about it?
Well, I think the way I look at it is we kind of already are using metaverses in a sense of our phones, Instagram, Snapchat. These are more Web 2 platforms, but they're already sort of virtual worlds. And even thinking about PlayStation games, Xbox games, like Fortnite or Call of Duty, they're just characters in different made up virtual worlds. That's kind of already using it. The way I look at the metaverse is just another level up from that, where we can build economies inside those platforms, where we have businesses and currencies, and we're buying and selling things, and then we can move our characters between metaverses and build out NFTs. I think it's just another level up, where we are, we're a user and also an owner of those platforms, not just a user. Like our Facebooks, for example, where we're getting our data sold to God knows who. In these platforms, we can control that a little bit more and actually earn money for using these platforms, and that's the way I look at it. I think it's just another level up. I don't think it's this brand new thing that I think the marketing terminology has been really ramped up on it, but I think we already use metaverses, I think, in my opinion, and it's just another way of describing what's being built in the Web3 world.
That's a way that I can really relate to as well. I think it's more of a gradual process of transitioning or evolving from Web 2 to Web 3, from a regular use of the smartphone and apps on the Web 2 to what the metaverse will become. And to your point about Facebook's data and things like that, 3.5 billion active users, and onboarding them into the metaverse is both exciting because of the exposure and also a little spooky. So if the status quo continues with their blueprint, but very interesting nonetheless, because they are a tech giant and they have the ability to make things happen.
Yeah, I was speaking to someone from Decentraland yesterday, and she works at Decentraland, and they're really going heavy on the events side and hosting events, in Decentraland, for example. So, whether that be fashion events or sporting events or, catwalks or whatever it might be, to add value inside, like educational sessions where you can go and attend from your home, whether that's on your computer or whether you throw on the VR goggles, whatever that might be. The future for that looks like being able to attend concerts and attend different things from the comfort of your own home. And that's like in a level up that hasn't been possible before, unless, it has been. You think of games like The Sims, for example, or like, I don't know, I'm sure there's other like online chat groups and like virtual worlds, that have been created before. Sims is a great example of like an old computer game where you create a character and you create a life within a different world. So people have already been doing this as like an escapism mechanism to like get away from the real world and being able to be whoever the hell they want to be in a virtual world. It's interesting when you mix that with the technology that's being built in VR and AR, where you're not even going to know the difference between what's physical world and virtual world, and you can be whoever you want. And that's going to be really fascinating to see where that goes. I'm kind of excited to see what happens there.
And to that point, I know it has been, for the example of The Sims and things like that, going on for quite some time. And I've never played it. Fortnite or what's the other block one? I just blanked on it.
I
should know.
Minecraft. Yeah.
Well, yeah, and that's what I wonder too. Is a lot of the events that I am seeing, or the screenshots or the pictures, it is very kind of block oriented. Where I wonder if is it really all that it hypes up to be? Yeah,
I personally don't use a metaverse right now for any sort of like activity. I guess it's there for entertainment, if you want. But I agree. I think the user experience for most metaverses isn't great in the sense of like it's not mind blowing. Like if you go and buy the latest PlayStation game, like you're going to be blown away by the graphics. It's certainly nowhere near that level in a metaverse just yet. So, I think as time goes on and that improves, I think that'll change. But I agree. For now, it's pretty it's basic or early in terms of the technological sort of development on that side.
And again, my expertise or my area is more on the trading side. So I'm not an expert in the metaverse or anything like that, or AR, VR, anything like this, though it is something I track and am interested in. But when I think of something like some of the most recent games, for example, a Call of Duty or something like that, I wonder if some of the developers of these games look over at some of the metaverse projects and think, man, that's where we were at 20 years ago.
Yeah, definitely agree. I mean, a lot of these big gaming companies are investing a lot of money into bringing on Web3 developers and Web3 game designers. I can't remember exactly the company recently, but I heard they hire, some of the biggest gaming companies are hiring 30, 40 people at a time to start to build out these strategies because they know that is going to be some part of the future. These sort of virtual worlds, mini economies, NFTs, it's all integrated in some way, shape or form. But from a game perspective, I think that's where we're lacking that. I haven't seen many good games developed in the Web3 world yet. There's one that was at the Gold Coast conference. I can't remember. Illuvium. Illuvium looks pretty. Yeah, that's probably the best I've seen. But personally, I'm not a gamer, so I'm probably not the best person to judge what is and isn't a good game. But just from what I've seen, people how they've reacted to that, and people like really actually getting on there and playing it, that actually looks half decent. So I think we're getting closer.
Yeah, that's great. It's exciting, but nonetheless, maybe kind of steer back to the course a little bit on whether it's coming into Web3, coming into crypto. What are some of the things you're finding in people, what they're doing well, what they're not, common mistakes, what people are learning along the way? I'd be really interested to hear your insights.
Well, for one, I think it's just basic human psychology that we all do wrong, is that we buy at the wrong time and we sell at the wrong time, right? Especially new people coming to crypto. How many people bought in at November because of all the FOMO and excitement? Everyone thought it was going to 100,000, and then the market corrects, so now we're at 20,000, and people sell and panic, and that's really because people don't know what they're doing. They bought in the hype, they panic and sell at the bottom. The reverse of that is educating and having conviction in investments. I don't think you should invest in anything unless you have conviction or know really what you're talking about, because you're going to make a mistake. So for me, it's like understanding what is money, what is Bitcoin, why is it important, where is it being used, what is the blockchain, what the governments do, why is a $10 note in our pocket worth that? That's where I really started and found so much like understanding when you really start at the top level and work your way down. Then I'm like, man, I'm going to ride this thing down to 99% because I know in the future this thing's going to be massively valuable, right? versus not knowing what I've bought. Like if I'm buying property or I'm buying some random stock I don't know about and it's down 80%, let's say I buy this some random company, right? And it's down 80%. I'm going, holy shit, what the hell is this thing? It's going to zero. I'm going to sell. Not knowing what it does, where it's going, why it's down. It's the same concept. So that's the number one. And then number two is I think people come into crypto, most people coming in to try and make money quickly. And that's where I see people buying, scams, basically 1% returns, AI algorithm bots, these random NFTs, celebrity endorsed projects, like all the bad stuff really. That's, stuff, really red flags you should steer away from. Again, human psychology, we try and cut corners and try and make money quickly. And that's where we make mistakes. I did that when I first started. Even in the NFT space, I was trying to rush in and buy this random NFT and end up buying a scam. That was my first entry into the NFT space. So luckily it wasn't too much, but I think, really understanding and separating those emotions that crypto creates, the dopamine, the euphoricness that happens when markets rise, separating that from actually having conviction and knowing what you're doing is super important, especially in a bear market.
This is really important, and I'm really happy that we can touch on it. And there's a broad range of whether it's a coin you're talking about or whether it's an NFT. I've got friends that have clicked on the wrong fake MetaMask link and had their whole wallets emptied. So that's the NFT side of things. I've had seeing things of even large-scale celebrities of recent getting fined upwards of $1 million for endorsing products they don't know about because someone paid them. And it's criminal. There's a lot of stuff going on. And even let's say something you think you do understand, number 4, I think it was Luna or Terra, I can't remember, number 4 by market cap, this huge machine, $40 billion liquidated. So there are all these kind of growing pains that I call them, or not even just growing pains, but market noise, growing pains, and some fraudulent activity that occurs, whether through scams or hacks or things like this. What do how do you get around that? How do you cut through the noise, and how do you equip yourself as, not just you, but, as a new user? How do you do that? Let's say as a new user, I've just got $1,000 that I've worked hard for, I've saved for, and I want to put it into these markets, and I get rug pulled, or I buy something that goes down 90%. That's got real impacts on people's life, and I think it's not addressed often enough. It hurts people. For
sure, man. It's really bad, and I feel sorry for anyone that's been caught out. We were pretty lucky. I think we put 1% of our portfolio in Luna, ran up to 7%, and then obviously that just sort of evaporated. Feel sorry for anyone who had the money in Celsius. It's really tough. And a lot of these things, in hindsight's a wonderful thing. We can look back and go, Luna, UST, there's algorithmic stable coin. Of course it was going to fail. Well, it was the number 4 crypto asset on the planet. It was worth $40 billion. There's not many people that really knew that, right? I'm going to say very few. So I think I have a level of paranoia in crypto, and I think most people do. Chris, I'm not sure about you, but I think most people in crypto that have been here for a long time have this sort of little bit of paranoia around safety and trust. So for me, I try and diversify where I hold my assets, especially if they're on. So one is the crypto side. So diversification across different assets. I don't just hold one asset. I mean, you can, but I like to have it. Bitcoin, Ethereum, maybe a couple of DeFi, just sort of diversify. But also the platform. If you're going to hold something on a hot wallet, if you're going to have something on an exchange, don't have all your money on one exchange. First of all, I'd highly recommend getting a cold wallet and getting it into a ledger, because no one can touch it. It's your capital. It's no one can take it off you. But if you're staking crypto, if you're putting in some yield thing, if you've got a bunch of money on CoinSpot or Coinbase or wherever, I would highly recommend diversifying that, because I've heard so many people that put all of their savings into Celsius. Now, again, hindsight's a wonderful thing. Celsius was promoting themselves as a crypto bank. Now, you think about a bank, you probably think it's going to be pretty safe. It's been shown that crypto isn't safe. And there's a lot of shit that happens. So I'd, first of all, highly recommend putting your crypto in a cold wallet, get a Ledger or Trezor. But if you want to earn a yield, if you're trying to do something on a platform or an exchange, don't have all of your crypto in one place, because shit does happen.
Yeah, awesome. And thanks for being a voice for that. I think it's really important. different ways to fortify ourselves. Because on the one hand, I am so excited about this industry. I'm involved with it. I've been professionally involved with it in the trading side and investment side for over 2 years, and it's exciting. But on the other hand, there's these areas of it that are toxic. Doesn't quite say it. And it points to a really interesting conversation, I think, about regulation, because on the one hand, regulation can potentially, bring consumer protection and address some of these issues. But on the other hand, it also is kind of in contrast with the whole idea of decentralization and the whole ethos of, cryptographic peer-to-peer, assets. Yeah. So it's really interesting to see it evolving. And some of these conundrums of the space, how exciting it is, how the underlying value of it, the network effects, in contrast to some of the Wild West nature of it, and even what you said, crypto at times is not safe. How do you equip yourself as a newbie into it?
I think it can be safe. If you follow the be your own bank sort of protocols, where it's like buying a crypto, buying a ledger, moving your crypto off there onto a ledger, store everything properly. And things are okay, but as soon as you start going into the world of yield and, trying to earn 20% on your crypto and using other platforms or trusting other businesses or people to hold your crypto, there's always risk in that in crypto. It's not like holding your money in Combank. It's a bit different, because a lot of these businesses haven't been tested yet. So yeah, always, for me, safety number one. I don't want to lose my crypto. And but by the way, I've never staked crypto, never tried to earn a yield, never had a lockup of my crypto. Apart from Nexus Mutual, I'm part of that. It's part of the protocol, but that's not a staking mechanism. It's how the insurance works. But yeah, I'm not a fan.
So you don't like those 40,000% APYs that pop up? Come on,
man. What are you doing? Free money.
What are you living under a rock?
That sounds great. Oh, nah, man.
That's awesome. There's one more thing I wanted to ask you, Ben. On the information side of things, how are you delivering the best information to people who are, getting into the industry or getting into the area so that they have some better quality and caliber of information?
Yeah, so we do a few different things. I think people like to consume content differently. From a podcast perspective, I know you do your podcast too, Chris. I love podcasts. I do 2 podcasts. One's called Decoding Crypto. It's with the Nova Radio guys out of Sydney. So Ed and I do a 10-minute episode 3 times a week where we really just break everything down in really simple terms. It's probably one of the leading sort of top basic crypto podcasts in Australia, which is really cool. I have a lot of fun there. I do another podcast called Ben and Bergs, where that's our chief product officer and I. We go a bit more deep into psychology, mentality, entrepreneurship, Web3, startups, that sort of stuff. Then we do a weekly newsletter. It's like a free newsletter. We sort of wrap up everything, give you sort of the core insights. We've got our YouTube channel. And then we have on our website over at Collective Shift, we have hundreds of free resources. We've got a beginner's course. We've got our crypto commandments. We've got a glossary, like a crypto dictionary. We've got a heap of stuff over there for free for people that are wanting to get in and get started. And then from like a more investor side, we have our membership platform where we sort of try and tackle things at a 360-degree view angle for everyday investors. So we give some on-chain analytics, we do some valuations, we do some sentiment, and we do some technicals. And really try and dumb it down and just give everything in a really actionable, simple, bite-sized sort of place. So we do that over on our platform. But yeah, I find trying different mediums is good, because people like to consume content differently. And it's, I'm not a big one for reading deep reports. I like more visual and audio. So that's where I sort of lean towards.
Yeah. And there's value to that. I love that idea of the 360 approach, because there's value in all of it, whether it's the deep dive into the on-chain analysis that I've seen through your platform, or some of the more candid, person-to-person sharing, which is also really valuable. It's a different kind of intelligence, whether it's data-driven intelligence or social intelligence. Yeah. It's important.
Exactly.
It's awesome. It's super awesome to connect today, man. I really appreciate your time
thanks, Chris.
Having the chance to chat a bit.
I had a lot of fun. We went down some nice paths out. I enjoyed that. It was good.
Yeah, me too. Awesome,
man.
Look forward to doing it again.
Yeah, you too, man. See ya.